realistically, if you're holding on to the trade, no real reason to get out. The market has broken out of this daily triangle that we've been talking about for quite a while. So let's take a look at some of the projections. Oops, wrong one. Let's get a line on this. And again, this is measuring the open, so we've got about 622 pips to go. That pegs the top around $2.02. Again, remember, this is based on Disc 5 and Disc 6, where I talk about some of these patterns. One way to measure the possible move from a triangle pattern is to take the opening of the triangle and attach that to the breakout point up and attach it to the breakout point down, or I should say, or attach it to the breakout point down. So we've got about 622 pips worth of possible move to the upside. So I'm not really looking to exit out of this thing anytime soon, and the momentum is telling us that there really isn't much of a reason to. If you're nervous and you're starting to see the market trade sideways like this, taking off the position up here would be a prudent measure if you're getting nervous, since we are coming into resistance over here from the daily bars. This would be resistance from January 28th or so. So I know I'm talking a mile a minute. Go back, review the video. I'm trying to get this thing out and done so I can go be with the kids before I'm away for 3 days here. That's why I'm talking like a New Yorker on speed here. I figured Charles from New York would get a kick out of that. Anyway, so as the market comes into resistance, watch out for these daily bars. We want to make sure that the momentum stays solid, and if we start to see doji bars kick off, especially on the daily session, that's the sign to get out. Another way to observe and watch the market is to take the 4-hour bar. And if the 4-hour bar starts to show signs of a reversal, you'll start to see this pattern extend out where it's dojis, hammers, just this real small bars, a lot of wicks to the upside where the market just can't complete itself to the upside. So you'll see a lot of this, maybe even some of these kind of bars. The important thing is to watch out for the wicks on the top side. You see that over here. You see it over here. You even see it right in through here as the market was running into resistance. Telltale sign that the market is running into trouble and it simply cannot follow through. So no short trade, no real pattern that's showing up. We just have to wait for this continuation trade to pan itself out. Very nice trade, though. I mean, we're looking at a couple of hundred pips off of whatever position was left over, whether it was 80%, 70, 50, whatever you had on. We've got a couple of hundred pips sitting there worth of profit at the most, and 150 or 160 pips worth of profit if you would have gotten stopped out as the market was working its way up. So keep your powder dry. Let's if you didn't get a chance to get in on that trade, we're going to have to just wait and see how the market trades near this prior resistance over here. We might get the market what I call squaring off, where it goes out of the out of the pennant pattern or the triangle pattern into a trading lane. So keep your eye on resistance. Keep your eye out for the next pattern.